YouTube, welcome back to another video. And today I'm basically going to go through how we turn, and this is an example from this week that I've just had. It's currently Friday, the 27th of September. It's 12:30 UK time. So obviously in the next sort of 8-9 hours, we're looking at the daily closes and the market's obviously wrapping up for the week. But anyway, this is a live example this week where Monday, Tuesday for me, not a good start to the week. We all have it, of course, 10 years in myself. We all have losing trades. If anyone tells you they don't have losing trades, they're full of rubbish. But it's obviously how we manage that risk, of course, as you know. So at the start of this week, I ended up being minus 1.65% down. That was a combination of 3 trades. That was one trade for a 1% loss. That was one trade at a break even, a 0%. And the other trade I closed out prematurely for 0.65% loss. So 1.65% loss in total. That was up until Wednesday. Now, the week, I'm going to go through this in a minute, so grab your pen and paper and hang fire. But then, after Wednesday night, we saw a turn and we saw a shift in terms of market structure. And predominantly, and this is what I talk about today in this video, about being very adaptable, very open to you being wrong, and then taking a step back and saying, actually, well, what has the market done? What is it telling me it's going to do? And then reacting and changing your plan sometimes accordingly. So you've got to be very reactive. You cannot marry that bias. You cannot marry that single bias, because actually you're going to sting yourself and sometimes miss some really good opportunities. So Wednesday came round and we saw a change in structure on the JPY basket. Basically, I won't bore you guys, but basically high time frame structure wasn't respecting the bullish play anymore at the time on Wednesday and Thursday. Saw a break of structure on the higher time frames of some of my sort of conferences, telling me that we're going to see the JPY basket actually continue going to the downside, which obviously meant JPY weakness. So I was looking at a GBP JPY short actually, at the start of the week. That was my bias. And then when we saw that JPY basket change in structure on the higher time frames, I then started to turn my attention on GBP JPY to taking some longs. But obviously we still had to wait for the right conferences, the right price action, and structure and price to tell us that it was going to do that. In the end, ended up banking a 200 pip long on GBP JPY. I will attach a screenshot here, and we're going to go through the analysis now as well, so you can see just how important it is to, like I said, not marry a particular bias, be open to price changing, because it always is. Markets are forever changing, so you have to be adaptable. So we're going to go through that analysis now, and in the end, that trade's banked me 3.9%, which we're going to go through. Now, obviously, being the first 2 days of this week being down minus 1.65 to now banking a trade of 3.9%, we're obviously back in the green for this week again, which is brilliant. Now, I'm still currently at the time of this video in a euro pound short. I've got an initial entry and I've also got a scale in running. And sort of it's about 125 pip target. So that's running quite nicely as we speak. So if that closes out, we'll be banking 4%. So actually the week will turn out in being into a nearly 7% week after having a pretty dodgy start. So it's so important, guys, you stay calm and that you just keep assessing the situation and trade what you see and not what you think. Let's get into the analysis. So here is GBP JPY, and we are currently on the 4-hour chart. Now, originally, we were looking for shorts in and around this region, but what we ended up seeing, obviously, the 4-hour continues to break to the upside and had another bullish leg here. So that's my initial thing, thinking, that's not respecting my bearish play. So obviously sit on our hands. Let's see what further price does. Let's see what the next 2, 3, 4-hour candles do. As you know from other videos, if you've been watching me, for me, 4-hour and above are the only trustworthy timeframes in terms of confirmations of structure, confirmations of areas of interest, confirmations of breaks of structure, continuation trades, all that good stuff, all right? Anything below that's not always, isn't trustworthy, if I'm putting it bluntly. But anyway, we were looking for shorts, but obviously it was disrespected. Now, at the time as well, the JPY basket was still respecting the bullish play. So obviously with a bullish JPY basket, GBP JPY is going to sink, hence the short play on GBP JPY. Now, on the JPY basket at the time, we were waiting for it to form its next high and low and confirm it, and it never did. And it broke the 78.6, and it broke... and in my eyes, that's one of my big indications that we may be seeing a potential trend change. So then you're starting to shift that mindset, say, right, well, The original shorts we had planned, definitely now probably not going to happen. Definitely not an option. Let's park it. Let's get that out of our heads and start seeing if we can look at potentially scoping out a long position, but getting the right conferences still, getting the right risk to reward still, all of that stuff as you should be doing for every single trade. And when we then saw the JPY basket, as I've just talked about, confirm actually it wasn't going to respect a new higher low, we were then looking for, back to GBP, JPY and what we're trying to trade, we can already see the 4 hours beautifully swinging higher, which is obviously what we didn't want initially. But now that we're turning our attention to long plays, it made our life a hell of a lot easier. So all we were looking for here then was basically ways to then get in on higher lows on GBP, JPY. And that's what we ended up doing. So we had the nice swinging bullish 4 hour structure here. We made a subtle new 4 hour high here. We confirmed another higher low here. And after we formed this new 4 hour high, confirming again, just that more of that double and triple confirmation that we are genuinely going to go higher, that's when I was then looking for the actual live execution of the trade. So I actually had to drop down slightly lower timeframes for this. So 1 hour you can see at the time was still swinging fairly nicely in terms of bullish price action. So what I did, we ended up once I saw this next sort of higher low formed, this 1 hour sort of bullish engulfing, and that was confirmed. Then it was, and after the end of this, let me just get rid of that. At the end of this then 1 hour candle close, that was when I got in on my entry. So we're using you're piecing all these confidences together. And obviously I've had the stops below that most recent prior sort of higher low that was formed. So obviously if we break that, then we're potentially looking then at turning and rolling over to the downside again. So the stops were placed again in a position where if they got hit, it was going to invalidate the long play and we were probably going to turn bearish again. So it has to be placed with precision and has to be a why. And this is why your stop loss in terms of number of pips will vary every single trade, okay? And obviously then we had a really lovely push, minimal drawdown on this trade, minimal drawdown. We had a really lovely push and we ended up going on to do 200 pips basically. And I ended up manually closing it, but it was sort of 4 or 5 pips off target. So I just thought, we'll close it out, 4 or 5 pips. It's done the bulk of the move. It's done 99% of the move. And we closed out. So it just really goes to show, guys, that it's so important that you stay open, okay? Because this is a conversation I have with sort of the community members quite a lot. We may forecast certain positions at the weekend or on the Monday when price and the market's opened again. But then as things play out and as things move and so on, as news comes out and all that stuff, we have to be open to us being wrong. We have to be open to things changing. And if you can get the hang of that and be very open about it, you can then capitalize on positions like this. So that decision making this week between looking for shorts to then turning to looking for longs, that decision making was only over a few hours. And it's really, really important that you're not marrying that one bias. So guys, as always, I really hope that's helped and I've kept it fairly succinct and educational, of course. I always want these videos to be super helpful and tips and advice you can implement straight away. But it just goes to show now, touch wood, as long as this euro pound trade plays out, we're going to have actually a very good week. We're going to finish nearly 6 to 7% up in a week, which is really, really fantastic after having a dodgy minus 1.65% loss to the start of the week. So, don't let losses get you down. As I always preach, losses, they're inevitable. And if you're taking the right kind of losses, then that's all they are. You don't need to beat yourself up about them. You go again, you pick yourself up, clear mind, and you go again. You should only be hammering yourself if you're taking losses where you're going against your rule set or you've over-risked, you've over-leveraged, you've broken your plan, basically. That's when you need to be very hard on yourself. But if you're taking typical losses like I have, one of those losses, as I said at the start, I took myself out for a minus 0.65% loss prematurely because I saw a shift in the change on the DXY, which invalidated one of my setups. It was USD Swissy, I believe. So I'm glad I did the right thing because it would have gone on to hit my stop loss for 1%. So I know it's only minus 0.35% that I've saved myself, but it all counts and it all eats into your P&L. You imagine if you're having 3, 4, 5 losses on the bounce, that can start adding up. So really important you're not marrying that ego and that you keep things simple. As always, guys, if you want my help, if you want any ideas, you want to see my market analysis each week, videos, all that good stuff, links in the bio, and I'll catch you on the next video.